Hello and welcome to Leviathan News. It's March 27th and big day news, actually. We have been talking internally on Leviathan about how we're going to do the shows. And I think we've been missing out on talking about a lot of news. We've been talking to a lot of projects, but we're going to move the show now to talk about the big news headlines of the day for the first 10 to 20 minutes. And then we'll talk with our guests afterwards. But today, we have on Hedgehog Protocol, they have some really cool gas markets, gas market derivatives that are coming to product soon. And we're going to talk with them a little bit later on. We have Quivulo Esco, who is here today. Welcome, sir.
Yeah, thanks, sir. Thanks for having me. Really excited to be here.
Nice. And then later on, Smilee is going to be joining us as well, too, to talk about their Impermanent gain trading platform. But first, let's get to the news. The big story yesterday, which was all over the timeline, was that Munchables, a protocol that was on blast, was hacked. They had about $92 million worth of TVL in their contracts, and they put out a tweet saying they've been compromised. We're tracking all the movements to stop these transactions, and we'll update you as soon as we know more. Unfortunately, it got a bit crazy. We found out soon after that the developers who were running Munchable, and there seemed like multiple ones as well, too, they were North Koreans.
Of course they were.
So apparently there is this whole scheme by a wash of North Korean developers to just like apply for protocols using really crazy names. They put together a bunch of names and some numbers after the end. They apply like 100 times for jobs trying to get on. They have these really crazy GitHub profiles that we'll take a little look at here in a second. But they apply, and then they get their fake friends to join, and then they onboard all of their North Korean buddies onto the protocol to see if they can try and inject some bad code or at least get admin privileges, which is what happened here. So with Munchables, it was an upgradable contract, which obviously was the first mistake. And there was some implementation within the contract which allowed the hacker, or the exploiter in this case, to essentially give himself a massive share of all the deposits, even before any of the deposits came in. And so all he had to do once it hit a reasonable amount of TVL was just make a call. And that's what he did. It was rather simple. I mean, the issue at hand was that the code wasn't public and the implementation wasn't verifiable on chain. We have this tweet from Addy here that says that all the exploiter did was call unlock, and then he did this, and then he called for 17,000 ETH as well too. Kind of crazy, actually. That this is all that it took to steal all the funds. People didn't do any due diligence. They just blindly trusted this contract, which wasn't public, and put $90 million of funds into it. How crazy is that, Esko?
Very crazy. Like I don't know why do people still do that? Like haven't we learned anything?
I know. Well, it may be because Blast is not as decentralized. Hold on. Their focus isn't like decentralization and openness and transparency. They haven't gotten there yet. It's more about gambling and yield and all this other stuff, airdrop farming. And
well, this time the house lost a lot in this gamble.
Yeah, and the drama soon intensified as ZachXBT came out and replied publicly to one of the Munchable devs that, buddy, I will rape you and your other North Korean devs so hard on chain, your country has another blackout.
Dude, don't say that. They have missiles. Like, don't be saying
actually, there was a really funny tweet from Nick Carter that came out as well too, that said something to the effect of like Blast, which is the new name of what the sound of the North Korean missiles are going to make when they launch after all this money's stolen from Munchables. Another day, another hack in crypto. I mean, it happens. Like, just don't have, you know, just don't have like unverified contracts out there with bad implementations. It's just crazy that we're still doing that in 2024. We haven't learned, right?
Yeah, crazy.
Yeah. So, like soon after, we had some information come out from ZachXBT. So apparently there were 4 different devs hired by the Munchables team and linked to the exploiter, probably all the same person. And they recommended each other for the job. They kind of used the same exchange deposit address. They were all funded from other wallets. And like I said, they had these like similar names where it was like a word and then some numbers. Like here it was Nelson Murrah 913, Werewolves 0493, Right Dragon 0791 or 19. They all kind of had linked payment addresses, which you can see here, that were used to deposit addresses. And here is the GitHubs. I wish we had a bigger one here. The GitHubs for these devs, but pretty much like you can see that he has pretty much every language possible. It's a very small picture, I'm sorry, but he has pretty much every language possible and tools possible in his resume. He has a bunch of Git projects which are like closed off, so you can't see the original repository that they've just forked over, and obviously scams here. So the North Koreans went big here.
He's, you know, he's like the North Korean officer with the 1,000 medals on the chest. Like that is like the same kind of.
Yes. That's a good point, right? Yeah. Like
that's a North Korean resume. Like that is how it should look like.
Like this one here. I can blow this up.
Yeah.
All these medals. This is your developers showing up.
Yeah, like, well, they're like all the different languages, you know, the tools. Like
here's your developers showing up applying for your dev work.
Yeah, this is a dev called North Korea.
Well, soon the discussion turned after that to, well, how are we going to get the funds back? And we'll get to like the actual outcome here in a second. But before I went to sleep last night, and probably right as you were waking up, Esko, there was a lot of discussion about whether Blast should roll the chain back. Blast is currently held by a multi-sig. They could essentially implement an irregular fraud proof into the L2, essentially roll back the chain and get all those funds back. It would have had significant damage to the bridges, which had been providing services for Blast. They probably would have lost a lot of money. And there was a lot of questions about what should they do? Like, should they roll back the chain or should they give $62 million to North Korea? And we're going to have a bigger discussion about this tomorrow. I believe Alex from our resident lawyer in chief is showing up, but we had some great memes. We had some trolley memes about what Blast should do. Let me pull this up. So this was a great little trolley meme that we got. Premise of decentralization versus 62 million from innocent depositors that would go to North Korea. And so, yeah, there's a lot of discussion about whether they should roll it back, should they not? And thankfully, they didn't have to, right? Pac-Man came out this morning. This came out at 2 a.m. And Pac-Man said that 97 million has been secured in a multi-sig by Blast core contributors. Took an incredible lift in the background, but I'm grateful for the Munchables dev. He opted to return all funds in the end without any ransom required. Nice. Yeah. So Munchables and protocols integrated like Juice Finance were affected. So he says people should learn from this and take more precautions about security. and the core contributors are always happy to help Blast builders with audit partners. And so they're working to distribute the funds back, and there'll be more details later this week. So thankfully, like, bad situation averted. I think the Munchables dev probably figured out, like, there's no way to get this ETH off the chain. If I keep on holding it, it's essentially going to have to force them to do a rollback, and I'm not going to get the money then. Or even if I hold it, no one's ever going to allow me to bridge this off. I'm never going to be able to use the Blast bridge, because they turned off the Blast bridge, both for the main bridge and then also for the other bridges like Axelar or anybody else that supports the wormhole. So there's no way to get this money out. So they just returned it. So good news in the end. Yeah. So thankfully, we didn't have to go down the discussion of, like, should we actually have to roll back the chain? Because I think that would have brought up a lot of other issues about the viability of these L2s in their stage 1 state, which is essentially run by a multi-sig. Let me see if I can find a picture about that, because there's like stage 1 or phase 1, phase 2, phase 3, which goes over, like, let me see if I can find this. I'll find it later. Anyways, there's like 3 different phases for these type of L2s, and right now there's no way to have fraud proofs that could essentially allow them to. Well, I mean, they have full control right now, is essentially what I want to say. So they could have rolled back the chain, but they didn't have to, because they got the money back. I think Pac-Man probably reached out, talked to the dev, told him that you're never getting your money back, and we're going to roll back if we have to. So just send it back, and he probably did. Okay. The other big story that we had today, kind of a big story, but I mean, it's still going to take a couple of years to figure out, is that Coinbase had a judgment come from a U.S. court saying that a claim by the SEC that they failed to register as a securities business was not dismissed. So it's actually going to go to trial now. And this was for their staking program. And then there was also another claim that they acted as a unregistered broker via their Coinbase wallet, was dismissed. That kind of falls in line with current thinking right now, I guess, from the federal level. If you have a like a wallet, I mean, that's not an unregistered broker. But their staking service, obviously, I think has questions, and that'll have to go to trial, or at least there's going to be more discussion that's more like exploratory work to be done in this case. Maybe there's a settlement later on, but essentially all it says is that this is going to have to move further for their staking business. If you remember, Kraken also had their staking business as well too, which they just shut down in the wake of the SEC's bringing the case, because they didn't want to fight it. It did have the news did have a negative impact on ETH. It's down 2.5% after the news, falling from 3,650 all the way down to 3,500. So yeah. And yeah, so last we want to talk about Coinbase. They came out yesterday and they said that they're going to be storing more of their corporate and customer USDC balances on Base. This is actually pretty cool. They're going to essentially put all of their USDC on Base eventually, which is going to allow them to manage and secure customer funds with lower fees, faster mint settle times, and no impact to the Coinbase user experience. So this is Coinbase pretty much going all in on Base support here, that there's really going to be no difference between funds that are kept on Base and funds that are kept on Coinbase going forward.
Yeah, Base as a chain has been like in fire lately. I think they are growing rapidly. already there's like so big shitcoin circus going on in there that like you won't believe. I just noticed there was some migration tool also that you can like in few clicks migrate like any ERC20 token from Ethereum to Base. So those guys are really pulling the liquidity in there. And also was interesting that I was yesterday checking like settlements which are done by paymasters, and surprising and interesting on the base was growing also like in paymaster settlements, and like not the numbers aren't big. The numbers are really huge right now, like all over the scope of the paymasters. But still, if you look like the percentage growth to compare to any other chain, it was very significant.
Yeah. So if you look at the fees, this is just from the past 24 hours. I think it's actually, yeah, so there's about 1.7 million worth of fees that were collected by Base Chain, by people paying for pretty high gas fees, actually. 1.5 million of that goes to Coinbase. 250,000 goes to Optimism, and then 0.25 goes to ETH, which is pretty crazy at the end of the day.
Yeah.
So JP Lefteris had a picture showing that gas fees were on Base were showing like $24. They're almost like, probably almost higher than ETH fees at some points. Pretty crazy. But it's really good. I mean, if you're an exchange, I mean, you should have your own L2, right? It makes sense. And I think other exchanges are probably looking at this, seeing how many fees are generated just in this one-day period, wanting to take a look at that. Like, this is 1.5 million that goes to Coinbase for operating their L2. Yeah. So.
Yeah, I think this will be like more and more now. I think that the OKX is also launching their ZK rollup. I don't know. Crypto.com, of course, launched the Kronos, but like I don't know. I personally don't know any Kronos user, but like I think maybe in this cycle that will be more relevant to them.
Yeah. So gas is just wild on Coinbase. And speaking of gas, I mean, they might need a protocol like Hedgehog to provide gas derivatives for that. So that's why you're here today, Esko.
Yeah, that's why I'm here. Like I watching these gas prices and numbers go up, and thinking that what is the better time to launch this kind of a product where you can speculate and hedge and trade on gas than right now. So even though it's not a nice subject, and it's to people to get wrecked by gas, but I am looking very forward to deploy our tool, because I think we can help in this scenario.
So let's talk about Hedgehog. What it like here on the website, it says modular synthetic block space, hedge, trade, and make money on gas fees. So what exactly is Hedgehog and how does it work?
Well, we are building infrastructure for on-chain native derivatives, and we are starting with modular synthetic block space. So basically hedging and speculating and trading gas. We are focusing on, of course, just speculators, traders, who wants to trade gas like let's say sports betting, but most importantly, businesses like the roll-ups, like paymasters were mentioned, the AA wallets, companies who are interacting with gas. We're providing hedging tools for them.
Yeah.
And like we are having a very straightforward approach with the synthetic block space. So we are extracting basically everything out of physical delivery. We are looking at just the base fee paid on the Ethereum on the mainnet and replicated it synthetically. Very straightforward
So we've
to do. And
this isn't the first time that people have tried to create gas markets. I remember probably 3 years ago, there was like a gas token that you could buy. It was like an cheap. But it didn't really go anywhere. I mean, it got a little bit of usage, but I remember that one of the EIPs that came along essentially shut it down. You couldn't.
Yeah, it shut it down. Yeah, it was 1559. I mean, it shut it down. But when the Chi came, it was quite the opposite. It had the quite nice traction for a moment until it got killed by EIP. And funny enough, the Chi was like a brainchild of the 2-day hackathon. And I believe that even 1inch, it was 1inch token, and even 1inch announced that like don't interact with it, and this is like purely speculative thing. It was just creation of a hackathon, and of course if you say something like that, that is like invite that is like open invite for let's go. So yeah, it get quite nice traction for a moment, but yeah, it was killed by EIP. Then.
So I just want to bring up some docs that I have here. So with Hedgehog, right? It's like CDP. You say that it's like CDPs for on-chain native derivatives, right? So you use LSDs or stable coins or other things as collateral. You can mint the base fee against that, and then that goes into an AMM and is used for the liquidation pool as well too. And then that essentially allows you to peg the base fee token against like a moving average, which is then used to determine the price of gas. So even though gas can like spike up and down, the base fee token should have this nice kind of smooth line that it travels with.
Like it is a CDP model, so it works like very straightforward. You deposit wrap stake Ethereum, and against that you mint our base fee token. So it's basically works same as Liquidity, same as MakerDAO, but instead of a stable coin, you mint the volatile token, which is a base fee token, and that our base fee token is pegged to the base fee on mainnet. But the gas price, it's very volatile. So to prevent like constant liquidation cascades on the platform, we smooth peg the token. So as you mentioned before, it was the logarithmic moving average of the 50 blocks. So that smooths the token, the volatility enough to still maintain its interest. So it's still interesting to trade on, but you have like the most extreme gas spikes are smoothened out there.
So I just wanted to bring this. Also, once you mint, you can pair base fee against ETH and then add it into the LP pool, then use it as a product as well too. So as the base fee trades up and down, you can essentially get fees from that from people trading it. Yeah. So how do you think this is going to affect the gas markets with on ETH and then also on these L2s?
Well, I believe that we are creating a new kind of a gas market, a synthetic market. I believe that it will create its own kind of a niche slot, but what we are really trying to solve here is is the operational costs of the companies who are really involved with gas. So there's if like I have about 10 years experience on the entrepreneurship. I've been like startup entrepreneur for 10 years, so I recognize that at some certain point, the only way you to increase your profit margin, it's really to cut costs in somewhere, cut your expense. So this is like natural thing that what is the let's say for roll-ups, what are their biggest spendings? Okay, that is of course the gas payments, and this is where we step in, so we can provide tool for those businesses to streamline their operational costs. And I think that is very, very important for the whole the adoption, because this way projects can of course they can predict their operational costs a lot better for the future, so it helps with the planning. And of course it's for block space, for synthetic block space market, what we are creating. This is kind of a very cool derivative markets to speculate on if you just look on the Degen side of it.
And where will you guys be deployed once you guys launch?
We will be deployed most on Arbitrum.
Nice. And then expanding to other L2s as well too, right?
Yeah, some other L2s. Yeah, that where we have like this kind of thought process that should we chase the narrative? Should we maybe check the base? But I think that maybe smarter the way is not to chase the narrative, it's just to initially deploy on some established chain, and almost 50% of the whole derivatives market, on-chain derivatives market, is on Arbitrum. So that is kind of a natural place to deploy.
And when are you guys launching?
Q2, around May. We are now in 2 weeks in audits with Chain Security. We'll be launching testnet next month, and we're not really on the super rush on the launching the token. We want to really build first like viable product, and around May will be the TG.
Very cool. Well, we also have two other guests that are here today. We have Arbitrum and Abawara. What's going on, guys? You guys are from Smilee Finance. We've had you on before.
Hello, Jam. How are you doing?
Hey, GM.
Yeah. So I'm actually really excited about these hedgehog markets. Synthetic gas derivatives are 100% needed. It's a big market. You have a lot of players who want to hedge out essentially gas usage as it spikes up and down. And I think this is probably going to see some big usage once it comes to market. So really excited to see how it goes, Esko.
Thanks, man.
Yeah, definitely.
That seems pretty interesting, to be honest. I will deep dive what your solutions are, because it seems also interesting for us.
Yeah, I think it's something that everybody can use.
Yeah.
It's like basically everybody who is interacting with gas, and especially I see a good solution for projects who want to sponsor their users gas. Let's say it will be a very good tool for implement to the gas tanks. It will be very useful for single centers to bundlers. Well, basically, everybody who is operating with gas. Yeah.
And then, so that's going to go live. We'll have to have you guys come back on once it's out.
Yeah, sure.
So we can see how it works. Is it leverage? Can I leverage trade the gas markets?
Well, it's not kind of leverage trade. You can say it's like a more of a just longing and shorting the market.
All right. Well,
Maybe if at some point, at some years go on, the gas price will be so smooth that we need to like cut down the steps of the logarithmic moving average and implement some leverage trading just to keep it interesting. But I don't think that is happening quite quite soon.
yeah. So here you can see some of the trading dynamics for it. You can mint the base fee token when gas fees are high, sell it, buy back lower. Or if gas is quite low, you could buy it on secondary. Or if you think that you just want to get into the gas markets and they're going to normalize over time, you could provide LP and make trading fees from the in the base fee ETH pool.
Yep.
It's very cool. So we'll have a link for Hedgehog down in the show notes, and you guys can go check out what they're building. The last thing that we want to talk about today is Smilee Finance. They have been on the show before. I think you guys were on a couple of months back, and you guys have some great news. You guys just launched.
Yes. Yes, I think we have been here maybe twice. Not
Yeah, I
just
think so,
once.
yeah.
There was just one time that was me, then other time there was Metadata and Tempest, and now there is also Larp7 with me. So all the team is going here. Some good news on our side. Yes. I mean, we launched 12 days ago officially on Arbitrum with capped vault at 2 million in order to scale up, let me say, progressively without making a huge impact on DEXs, as we very frequently operate alongside DEXs to swap and delta hedge position. So we had to scale it up like on a step by step. But we reached the cap like very, very fast, and also volumes are going very well. Now we are finalizing the Dune dashboard, so we can give you we can share pretty much better data on this. It has been a long journey. I don't know if Larp want to add something about it.
Not much else to add other than, things are going great, and this day was 2+ years in the making, so it feels good.
Yeah. So for people that are watching or listening at home, what is Smilee?
So let me try to.
Hey,
if you want, you can go.
Sure. Smilee is options and derivatives. We invented a derivative called Impermanent gain. It basically takes the IL from experienced by LPs and translates that into a payoff for traders. So some of the benefits are extreme leverage with no liquidations. And then for LPs, they get paid in fees via implied volatility instead of trading fees. So they get directly compensated for the IL and gamma exposure they have.
Yeah. So for anybody who doesn't know, when you add funds to a Uniswap LP, doesn't matter if it's a V2 or V3 contract, you're essentially opening an options trade. It has the same payoff as an options trade. And so you can do a lot of fun things with it by creating these option-like contracts on the back end, which you guys have done. I see you have a bull case, bear case, the smile as well too. And it essentially is just separating all the different parts of the LP of how you think it's going to move into the future into different components that people can come and trade. And you guys are offering pretty crazy leverage here. I see that the WETH bull market offers up to 420x leverage.
Yes, exactly. I mean, it's difficult to explain that very easily, but the things that we did was not only to understand that LPs are actually option selling, but we built all the mathematics on chain in order to take mathematically the impermanent loss as a singular, let me say, formulas and transform that and merging that with the Black and Scholes formulas. So by doing this, we are able to take any kind of impermanent loss exposure. So it can be full range, concentrated, and so on, and we can decompose it by our own into single option, and then we recompose that into this kind of derivatives that we are proposing right now. So this is like leveraging composability of the protocol for the moment on this, but that can be expanded potentially in any kind of volatility-based payoff. So they can be option, they can be insurance product, and so on.
Yeah.
All based without creating new kind of hidden risk for LPs, because LPs have always the payoff of an LP on a DEX. But the only thing that is changed for them is like the range is based on the implied volatility of the token. So it's not super concentrated, it's actually very large, the range that we select. And it depends on the volatility of the token. So actually everything is rebased on the calculation of the volatility of all the altcoin that we are doing with our customized bonding curve on chain. So actually it's also a new way to take data from DEXs and transform that data in also volatility data.
Yeah, so there's going to be two parts here. There's the trading, which we talked about, and then there's also the LP provision as well too. So you have a choice to come in and provide LP for one of these markets, like with USDC or ARB or GMX or Bitcoin. And that'll lock you into the position, and then people can trade against your LP. And then any of the, like you said, impermanent gain or gamma, as you want to call it, is essentially borne by the traders who are taking that risk and essentially paying an interest rate, aka like an implied volatility, for holding that position open.
Yeah, exactly. Actually, the mechanism, like on one side, LPs are getting all the premiums minted by this kind of option that we sell. And on top of it, they also gain all the bid-ask spread generated by the volatility AMM, because we have built on top of the trading component a volatility AMM that support the possibility to buy and sell whenever you want. So you are not anymore forced to stay until expiry date and monetize your profit whenever you want. And this for sure has to, for doing that, you have to pay a bid-ask spread based on the current volatility and the utilization rate of the protocol. And all these generate new streams of return for LPs. And on top of this, LPs also have like the possibility to have atomic strategies. So the first one that we did was atomic delta hedge. So for any trade run by a trader on one side into the same block component, there is an embedded strategy that automatically swap on the DEXs to hedge the delta of the LPs. On this way, they have like also another portion, let me say, of yield based on this active strategy. And we are also, let me say, this is, I don't know if it's the time already for saying some alpha, but we are also trying to understand how to implement potentially atomic lending component. So even to support on residual balances and on pending deposit, the possibility to have a new stream of yield coming from lending strategies.
Very cool. So how do you guys determine, how's the premium determined? So typically when you're buying an option, the market looks at the implied volatility of what the option price, of what the future volatility is going to be. And then you can determine the implied volatility from that. But with the LPs, essentially you just have the fees that you're collecting plus the volatility of the assets. So like where does this, like if I'm going to buy a WETH Bull option here, where does that pricing come from?
So the price comes from mainly on-chain, let me say, mechanics. Actually, the things that we have done was to write Black and Scholes into the smart contract. So it's able to calculate all the parameters needed to calculate at single strike the price of that specific option and then merge it all together as the portfolio that we are showing. Because in the end, WETH Pool is a portfolio of call. What we do that, so for example, for Bitcoin and Ethereum, that we have like some very good reference data coming from Deribit, we use Deribit, let me say, at the starting of the week to check if the volatility tracked on chain is still like aligned with that. While for all the altcoin, as you don't have like a real, let me say, volatility oracle, we had to build it by our own. So actually the things that we have done was to track at the beginning the realized volatility of the token. Starting from that, we launch our own pool with with the starting volatility coming from there. And then we track it on chain based on the utilization rate of the protocol, the price movement of the protocol for sure, and all the parameters done to, I mean, it's like a customized bonding curve that we have created by our own that tracks all the volatility of the protocol to adjust. the implied vol based on volumes and everything.
So I know this is getting a little bit technical. We had a comment from MD, one of the llamas, saying like only 1% of people really know what Greeks are in options. Like it's Vega and Gamma go hard. And he's right. Like people that first start trading options really don't, they probably get burned. They're like, oh, why? Like my call option, like the price has gone up, but I've lost money on this. Like what's actually happening? And they don't understand that the decay or the amount of gamma or how the volatility is going to affect the pricing. Yeah. And so like he's right. Implied volatility metric is key to precision in pricing. How does it perform against existing options markets? Is there a lot of mispricing in the options to allow for like more complex hedging strategies to be taken, especially if you have multiple sources to hedge out the options?
Yeah, potentially an option aggregator on chain would help. The problem of today option space is also that it's very fragmented. So liquidity is alongside like different protocols and different chain. So creating a pure hedging strategy here is not that easy, especially with altcoin, because they are very, very liquid as of today. I don't know how many people can trade option on GMX, for example, as of today. And so that would be pretty much impossible for the moment. But for example, like as the reference price implied volatility is taken from Deribit, a very, let me say, efficient hedging could be like buying on Smilee, selling on Deribit, for example, or doing the same on Lyra, risk or premium. But I mean, for Deribit is easier because it's like Black-Scholes standard formulas, very close to ours, so you can better track like what are the dynamics. For other option protocol, you have to deep dive a bit like their pricing formula, but it's something super doable.
Yeah. Well, I think the easiest thing to understand here is that like if you're a LP and you have one of these like ETH or ARB or GMX and you want to pair it against USDC, the yields are pretty good for those LPs, right? The ETH pool is paying 90% or 80% at the moment. The ARB pool is paying 90%, GMX 150%. So
yeah,
if you
actually
just want to,
they made like more than 2% return in a week.
Oh wow!
Even though there was like a huge spike in volatility, so that means that potentially the avoiding bad debt component that we have forced into our smart contract is working properly.
That's great. So what's coming next with your guys' rollout?
Oh wait, before we move on from that, a side note is you may have also noticed we don't we hid the Greeks from the UI. We're trying to kind of simplify the trading experience because MD is right. In our experience, the knowledge on options in crypto was surprisingly low. Many of us coming from TradFi and whatnot. So yeah, we're kind of trying to create somewhat of like a Robinhood approach where it's very streamlined, simple to understand. It kind of feels somewhere in the realm of like perps.
Very smart. Yeah. I think that it'd be like some more advanced statistics once you guys get some bigger volumes in here, and bigger size would probably be helpful for traders, but making it easy for people to buy and just understand. It's really simple, actually, taking a look at the payoff lines here. So, it shows you that like for this ETH pool option here that you're going to buy that has an expiry of March 29th. So that's in 2 days. It needs to get at least 2.5% price increase for you to hit break even. And then after that, you can see the payoff here. So, if there's a 10% move in ETH, that'd be somewhere around like an 800% increase. So it's pretty cool.
Yeah, actually, it's like
Also
taking the
worth
option
noting-
principle and making it in a trade experience that is easier because you see the leverage and you can understand better than like calculating the grids maybe.
Mm-hmm. And so there's 3 strategies for each asset. There's like a call option strategy, the bull strategy, which is if you want to go long, the bear strategy if you want to go short, and then essentially a smile, which you can it's like a straddle, right? Like essentially, if you want to bet, like it's going to go either direction, you don't really know which direction it's going to go, but you think there's going to be a big move. It's kind of the opposite of what you essentially, you take the opposite of whatever the LP is providing. Well, cool. So what's next for Smilee now that you guys have launched?
There's a lot under the hood in terms of additional products and features we're working on rolling out. But in the immediate future, we have our eyes on Berachain. So we'll head over there, and that ecosystem, for those who are familiar with proof of liquidity, is a pretty natural fit for us, both in terms of like on-chain dynamics, but culturally as well. So we're pretty excited about that. And yeah, we can't say too much on the additional products and features rolling out. I'll leave that to Albie if he wants to share some alpha there. But yeah, that's the main thing we're looking at right now.
Yeah, some things that we are studying so far to accelerate are like some further integration for LPs, so collaborating with active liquidity managed providers, so such as like Orange Finance and Araki is trying to embed like some kind of strategy between that one. Working on also the lending component, as I was saying, and potentially increasing the number of DVPs. So as of today, you have these three trade and hedge strategies. We are working also on creating some kind of insurance-related DVPs on pegged asset and restaked asset potentially. Something that is still under discussion, not yet sure that we will do that together with another protocol or by ourselves, but it's something that can be easily done leveraging the composability of the protocol.
Very cool. Yeah, we had another comment about like win iron condors and time spread strategies as well too. But all in good time.
Yeah.
All in good time. Yeah, honestly, like one thing we're kind of trying to prioritize is how to better optimize and leverage the current strategies instead of adding the more like traditional complex option strategies, such as Iron Condor and whatnot. So like one question we get a lot about is, like how can I hedge my LP if I have my LP elsewhere? So we'll be rolling out something that will make that possible in one click.
Yeah.
So we're trying to do things like that.
So we also had one last question from MD who asked, clams, aka from Dopex, is being utilized under the hood. I think you guys mentioned that you guys built your own pricing model here for the options.
Yeah,
we did.
Yeah.
We're not leveraging anything from Dopex at the moment.
That's cool.
No, actually, yes. When we start building, I think that Dopex was not yet on Clam because we were speaking like with Boston, and we are very good friends with them. And so for the moment, we didn't discuss yet, but I think there are ways to do something together because they're doing very well on plain vanilla option market at the moment. I like this. I tried it out, and if you know how to manage it, you can make like a crazy insane return.
So
pretty good scalping over there.
Before you guys go, I think Smilee's a part of the Italian mafia, right? Italian ETH mafia.
Yes, actually. Yes, definitely.
Might have heard my voice. I'm the only non-Italian team member.
Acquired Italian team member. Yes, it has been like the first people that I met around the ecosystem when I jump in as a builder at Misenos as a crypto investor or trader was like a meeting like first done from Risk and Darren from Hyper, and then from there we met like Premia guys, Lyra guys, and so we start creating like ecosystem of option face on one side and the other side, and the small like Italian mafia leveraging like derivatives and option in the ecosystem.
Well, very cool. Well, I'm really excited to see you guys launched, and you can also go check out Smilee at Smilee, and you can follow everybody here as well too. So thanks for coming on today, guys.
Yeah, no problem. Go trade some ball. Let us know what you think.
Yeah. So one last thing, we are launching the Squid token for Leviathan here in the next couple of days. The way that you can earn Squid is by joining the Squid Cave. We have some instructions for that on the Telegram. Additionally, you can also come on the show as well too. We'll invite you to the newsroom. Once you've done that, then anyone can post to the Leviathan bot and help beef up our news feed and generate news for the feed. And then at the end of the month, we actually track how many points everybody gets from that. And then I believe there's like 1 million Squid tokens that goes out. So the first distribution should be coming up here at the end of the month, and we'll continue that going forward. And that token is deployed now on Fraxel. It's going to have some Fraxel points for using it. So please come join the Telegram channel. Also follow us on Twitter at Leviathan_news. And we will be back tomorrow. We're going to have Alex Golubitsky, our resident chief legal advisor, chief legal person, come on. We're going to talk about the Blast decentralization again, more in detail. Also the Coinbase stuff more in detail, and just get into the nitty gritty of all the legal stuff that's been happening over the past few weeks, and talk about the MetalX deployment that was done by Alex and Gabe Shapiro, and find out more information about that. So thanks everybody for tuning in today, and we'll see you tomorrow.